Welcome back to Alpha Recap. Glad you could join us. Markets closed with a bit of a risk-off tilt today, and we've got a mix of heavy trading flows, takeover chatter, and more AI and healthcare headlines to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to dig into. From leveraged bears lighting up volume screens to a biotech deal that ties into the big AI theme.
Let's start with the trade that jumped off the page. Those leveraged bearish ETFs. SOXS, ProShares Ultra Short Semiconductors, finished the day up about 1.8% to $1.73, and it traded roughly 492 million shares. TZA, the small cap bear, was up about 4.5% to $6.29 on about 123 million shares. Big volumes.
Yeah, heavy turnover in those products is a classic sign of short or hedge positioning. Traders buying protection or trying to profit from near-term weakness in semiconductors and small caps. For fixed income folks, this kind of risk-off action matters because it usually nudges credit spreads and safe haven flows.
So, what really stands out here is how these leveraged instruments can amplify intraday moves. Explain that in plain terms for listeners.
Sure. Leveraged ETFs are designed to move 2 or 3 times an index daily. When traders pour lots of volume into them, you can get outsized volatility in the sector and related names. Options, suppliers, even bond spreads can wiggle more than usual. For long-term investors, it's mostly noise. For active traders, it's opportunity. Right. And the other thing is algorithmic and short-term speculation often drives these spikes. So don't assume it's a durable bet against semiconductors until underlying index price action confirms it.
That was my next question. Is this a lasting shift or just hedging? What should people watch tomorrow to tell the difference?
Look at semiconductor demand indicators, inventory numbers, chip equipment orders, and supplier commentary. For small caps, follow the Russell 2000 reaction and any guidance from mid-cap companies. If selling broadens to cash indices, then the story is bigger.
Okay, moving on. PayPal rumor mill restarted today. Investing.com mapped out potential suitors and reasons why someone might want to buy it. That pushed chatter and likely some re-rating, even without a formal approach.
Yeah, that tracks. M&A rumors can move a stock just by changing expectations. But any real approach for a payments firm would trigger regulatory scrutiny. Payments infrastructure and antitrust are obvious flags. So even serious bids can take a long time and face big hurdles.
Hold on, say that again?
I mean, a bidder might pay a premium, but the regulatory review could reshape the deal or slow it dramatically. Investors who chase the rumor without understanding the regulatory path can get whipsawed.
So the near-term play becomes event-driven. You're either positioned for a potential takeover premium or playing hedges. Any specific catalysts to watch?
Formal statements from PayPal or named suitors, any regulatory filings or commentary, and insider or board moves, like a poison pill or buyback announcement, would be the big ones.
Quick reaction, big move.
Right.
Shifting gears to governance. Apple shareholders voted down a proposal seeking a report on the company's China entanglements. That was a governance outcome more than a financial shock.
Exactly. Rejecting the proposal keeps management from being forced into a new disclosure. The nuance is whether the vote was close or a landslide. They didn't include tallies in the release, and that matters for activists' future strategies.
If it was close, activists see an opening. If not, then management stays in control of the narrative.
Yes. And because Apple has meaningful geopolitical exposure, governance outcomes like this can set the tone for future proxy fights or disclosure pushes.
Let's talk attention indicators. IBM searches spiked today. Google Trends showed about a 300% increase and roughly 20,000 searches for the phrase IBM stock. What's driving that?
Search spikes usually mean fresh retail interest or rumor-driven curiosity. Given the day's biotech AI tie-up, Some of the attention may be AI related. If the search surge coincides with earnings, partnerships, or product news, it can turn into real trading volume and volatility.
So search interest can be a leading indicator of retail volume, and that can create short-term price moves.
Right. If you're an investor, you'd look for confirmatory news before assuming a durable re-rating. Search interest alone is noisy.
Now to something I really like. AI meets biotech. Valinor Discovery and Renew Biotechnologies announced a partnership to build a large multi-omics dataset for neurological disease models. No money was disclosed, but the idea is combining high-resolution multi-omics with machine learning to speed up preclinical decisions.
This is a textbook example of the data plus AI trend in life sciences. Companies that stitch together unique, high-quality datasets and pair them with predictive models can shorten development timelines and reduce costly failures. It's structural and long-term, not a one-day trade, but it highlights where value is being created.
And that links back to IBM and other tech firms who provide the compute and cloud services these projects need.
Exactly. If these projects scale, cloud providers and enterprise software vendors could benefit through compute, storage, or licensing arrangements.
Quick hits. There were some industry and leadership moves today. The first cannabis industry retirement report came out. Independence Pet named a new president for its pet group. Everline reported expansion, and Sol Digital added a client executive.
These are more structural and strategic items. The cannabis retirement report, for example, is a sign of maturation. Better benefits infrastructure can help hiring and retention, which matters for margins over time. Leadership hires and franchise expansions are early signals. Investors should watch for follow-up metrics like plan adoption rates, franchise counts, or revenue targets.
So, not market moving today, but keep them on the radar.
Yeah, absolutely.
Before we wrap, let's run through the fast takes so listeners have a tidy checklist.
Sure. SOXS, up about 1.8% on heavy volume. TZA, up about 4.5% on big volume. PayPal, renewed takeover speculation. Apple, disclosure proposal rejected. IBM, big search spike. Valinor and Renew, AI plus multi-omics partnership. And the sector items. Cannabis retirement report, Independence Pet leadership, Everline expansion, and a strategic hire at Sol Digital.
Honestly, I was a bit surprised by the scale of the leveraged ETF volumes. That felt larger than I expected.
Me too. High turnover like that can increase execution risk for passive investors, and it tends to make intraday price action choppier.
Okay, takeaways?
1. Today was a mix of tactical and structural moves. Lots of short-term positioning through leveraged bears, and simultaneous long-term themes around AI and data in healthcare. 2. M&A chatter can dominate stock moves without being a done deal. Regulatory paths matter. 3. Search spikes and data partnerships are signs the market still prizes AI exposure, but confirm with earnings and filings before changing allocations.
And for traders, volatility means opportunity. For long-term allocators, wait for confirmations, earnings, filings, or formal deal steps.
Right. Watch tomorrow's catalysts. Any formal comment on the PayPal chatter, semiconductor demand data, Russell 2000 reactions, Apple follow-ups on the vote, and any news explaining the IBM search spike. Also, look for details from the Valinor and Renew partnership on timelines and commercialization plans.
If you want to follow up, remember, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks. Great chat. Talk to you next time.